Well, they didn't come out and say it, but certainly our sense from the Reserve Bank's commentary and forecast today was that that may well be that for the interest rate cutting cycle in New Zealand. Just about everyone today thought we'd get a 25 basis point cut in the official cash rate. That was duly delivered. The OCR is now down at 2.25%. But really all of the interest was around what the bank might say for next year. Would it leave the door wide open to another cut in February next year? Would it leave it ajar? In the event, it was probably neither. It was really just a sliver of a chance that the bank might go again in February. If you look at the bank's forecasts, they imply about a 20% chance that they might have to cut again. And that's probably about fair. Now, the Reserve Bank did carve itself off a bit of optionality to restart the easing cycle if they need to go again next year, if some of those signs of life we're seeing in the economy right now do fizzle out. That seems pretty sensible. We do think the bar to getting this easing cycle going again, though, is pretty high because some of the numbers, the economic forecast the Reserve Bank's put out, seem a little on the pessimistic side to us. We see a decent chance, actually, that the economy will beat some of those forecasts. I think there's the strong sense that the bank feels like it's done the work. It's lowered the official cash rate 325 basis points in 15 months. And now it's a case of grabbing a chair over summer, watching a bit of the cricket, watching that work hopefully bear fruit in the economy, and we continue to round the bend and things improve next year. Now, we think they probably will. What that means is that the OCR outlook for next year is looking much less exciting, which I think is probably where the Reserve Bank would like it to be. There's also no change to our existing expectation that that was the last cut of the easing cycle, and Reserve Bank will be on hold next year. Now, if the OCR has indeed fallen for the last time, well, that would also tend to suggest that the downtrend we've seen in mortgage rates is on its last legs. We might see a few more additional downward tweaks from here to those short-term mortgage rates, particularly since the bank has retained that downside optionality. But the bigger picture is one where I think we're nearing the end of that trend. Now, given that, I think we're going to see some debate about what it all might mean for mortgage fixing from here. Now, we laid out our expectations and some considerations about that, as well as the house price outlook, in a document we put out yesterday. It's called the Property Pulse. Always a little bit risky putting it out the day before a Reserve Bank decision. But I think, look, the conclusions and views in there still hold up in light of what we saw today. So you can have a look at that for a bit more information.